All right, three things in 3 minutes. Let's get it. So, one of the biggest business decisions I ever made was moving LaSalle Mortgage to a different mortgage company in early 2025. Part of the reason was access to better rates, better technology, better management. But there was another reason, and it came down to a single mortgage product. The mortgage bank we have been with for the last year and a half, CMG Home Loans, offers something called the all-in-one loan. It's not the right fit for every client, for sure, but for the right people, I don't think there's anything else like it. Most mortgage products are designed to help consumers get into a loan, get into a home. This one is designed to help the right borrower get out of the mortgage debt sooner so that they can own their home free and clear. Here's what most people don't realize. Over the next 5 years, more money will flow through the average person's checking account than they currently owe on their mortgage. The all-in-one loan puts that money to work. It combines your mortgage with your everyday checking account, so every dollar comes in temporarily reduces your principal balance before you spend it. Since interest is calculated daily, the consumer ends up paying interest on a smaller balance, which can dramatically reduce the total interest paid over the life of the loan. If you are in real estate, you don't need to understand every detail of this mortgage. Just know this. If you have clients with strong cash flow, money left over at the end of each month, and a desire to pay their mortgage off before retirement, this can be an incredible strategy. In many cases, borrowers pay their loan off in 7 to 10 years, and the interest savings can be similar to having a mortgage rate below 3%. Even if this isn't the right strategy for every client, I think every homeowner deserves to know that this product exists. All right, number 2, before every important conversation I have, I still think about this framework that I learned from Phil Jones in a training I did last year. Prior to heading into any critical conversation, define your 3 levels of success. First, what's the worst case outcome? If everything goes to shit, what's the worst thing that could possibly happen? It helps to make you realize that the world will keep spinning and you'll survive. Number 2, what's the outcome you're actually hoping for? Get clear on why you're having the conversation in the first place. And then number 3, think about if today were your birthday, if you could get exactly what you wanted, what would be the beyond your wildest dreams outcome, and what would that look like? Here's why this matters. Most people walk into important conversations hoping things go well. That's not a strategy. It's wishful thinking. When you've already thought through those 3 scenarios, you show up calmer, more well-prepared, and less reactive because you've already decided what success looks like. Whether you're going into a listing presentation, talking to a client, or having a difficult conversation at home, spend 5 minutes defining your 3 levels of success so you know your outcomes before you walk in. It might be the difference between reacting in the moment and leading the conversation from the front foot. Finally, mortgage rates are trending up again. It looks like the ceasefire between the US and Iran is not going to hold. And so we're in a situation where rates have jumped from about 6.5% to something higher than 6.625 just in the last week. Keep an eye on what's going on with Iran. If you are optimistic that a deal can be reached and held to, perhaps we'll see rates come down. If this thing continues to drag on, inflation will continue to be the most important factor driving all markets, and that means higher for longer. Regardless, y'all got this.